Our next guest runs the government's nonpartisan Congressional Budget Office. In a recent update, the CBO said that the U.S. budget deficit will rise to almost $2 trillion in 2024. That's the largest amount outside of the COVID era. Joining us right now is the CBO Director, Phil Swagel. And Phil, thank you very much for being with us. You've been trying to warn about what the continuing challenges are and maybe growing challenges are in terms of meeting some of our budget issues. Why don't you lay out what you think the biggest risks are right now, how much more complicated this is getting?
Yeah, thanks so much. Thanks for having me on. The near-term danger is rising interest payments. That interest payments are nearly $900 billion this year, which is more than defense discretionary spending. And it's set to rise, right? Rates are not skyrocketing, but they're higher than in the past, and we have more debt. And so there's rising interest payments, and then by the end of the 10-year budget window, we have the Social Security Trust Fund exhausted, and then the Medicare Trust Fund exhausted just after that. So that's the challenge. Things just get much more difficult over the next several years.
What happens if the Fed lowers interest rates? Does that save us?
Lower interest rates would help on the federal deficit side, if that means that net interest payments go down. On the other hand, the amount of debt has gone up by so much that even modestly lower interest rates won't change the fiscal trajectory.
I guess when you look at it, though, it does make me wonder if there's going to be pressure on the Federal Reserve to do the right thing, lower rates to make this easier. What would the end result be if that does happen?
Yeah, certainly those pressures will be a danger, and the Fed is independent, and its officials have explained that they will maintain that independence. So I think we can put our trust in the Fed. A tension between fiscal policy and monetary policy would result in either higher inflation or higher interest rates that affect the government debt. And that's the kind of tension that really could pose a challenge in either direction.
Would you label this a crisis today?
It's not a crisis today. I was looking at your screen. The 10-year yield is just over 4.2 as of this morning. That's not a crisis. It's manageable. It's a challenge that's growing over time. And that's the problem, is that we need to act now to head off the bigger problem in the years to come.
I feel like I've been listening to the same story for more than 20 years. People warn that this needs to happen. We have not hit a crisis point. We have not had a point where buyers say, forget it, we're not buying any more of your debt. We haven't seen Treasury yields skyrocket as a result. And so people have become a little inured to this. When do you think the stuff really does hit the fan?
Yeah. Now, I think what you pointed out is really important, that A, there's not a crisis today, but B, the risks are rising. And the challenge for policymakers is to look ahead and to say, I can't identify exactly when the crisis point will come, when the rest of the world will hesitate to buy U.S. securities, to buy Treasury securities. But we know it's coming, and we need to act before then. And it's going to be a challenge for whoever is the next president to look out ahead and address the fiscal challenge.
Neither party seems to be stepping in and saying, you're right, we need to do something about this. Both sides seem to be looking at spending more.
Look, there are many challenges facing the country, and policymakers want, lots of different things: more national security spending, more social spending. Some policymakers want tax relief. There's the 2017 Tax Act. Much of it expires next year. So there's lots of desires for spending or tax relief, and that's the challenge: is to address those desires in a fiscally responsible way.
We talk about modern monetary theory, the idea that it's okay, you just print more, or you maintain rates, you lower rates, we'll work our way out of this. What do you say when you are given those options by leaders on the Hill?
Yeah, that was something that when I started at CBO in 2019, I heard a lot about. And it seemed like a philosophy more than an economic theory. And now, after the high inflation that we saw in 2021, 2022, the inflation's come down. But those discussions of printing money and, sort of unlimited spending have subsided. So that's, maybe that's the first step toward fiscal adjustment, is in some sense, focusing on the problem.